And I think that's a good kind of jumping off point to talk about ETFs. What do you think about ETFs? Is this a good thing for the world at large, or is this the dawning of the age of Bitcoin becoming PayPal? What do you think?
Well, I mean, if money comes in from ETFs, they can't change the protocol. So I don't think it's going to have much of an effect on how Bitcoin works. But it is going to allow a lot of investors who don't have access at the moment to have access through their brokerage accounts, through their pension funds, through things like that. What concerns me, and I think should concern everyone, is that it's very critical that these ETFs know how to manage digital currency in large amounts and how to store it. So I'm not sure who said earlier that they would trust the regulation of brokerage firms to hold Bitcoin more securely than grandma with a hardware wallet. I wouldn't. And I wouldn't for a number of reasons. The biggest one is that if you put all of the Bitcoin in a single place, that concentrates the risk and creates this massive honeypot that really, really increases the odds of it getting attacked. One of the advantages of grandma holding her own Bitcoin in a hardware wallet is that that's decentralized, and decentralization is far more secure. You have to attack every grandma out there in order to take away the $300 million from that exchange fund. You have to attack 300 grandmas, each having $1 million each or more. It's a lot harder, obviously, to pull off an attack like that. And I mean, one of the concerns, and we've seen this in the comments by the SEC, and I think these comments are smart, is concern about how these ETFs will manage their holdings. Holding digital money and holding large amounts of digital money in a centralized fashion is dangerous. And that has been proven again and again and again. And so one of the concerns I have is that these ETFs bring with them the very significant risk that one of them gets hacked, that hackers walk away with a lot of money, and you have a very high-profile GOX event that affects mainstream investors and institutional investors who thought they were taking a fairly limited risk. And that's not the case, right? So all of those things weigh when you evaluate the ETF. It's a double-edged sword. I think we'll see. If it's well managed, it's great. If it's not well managed, it's not good at all.
What do you think about the institutional entities using paper Bitcoin or ETFs to push around the price or kind of manipulate the market like we see in gold markets and silver markets?
Well, if they're trading Bitcoin they don't have, then they introduce one more risk into the market, not just their holding risk, but also the counterparty risk of fractional reserve banking. So the question is, what happens if investors decide to withdraw their money from the ETF and the ETF doesn't have that Bitcoin? At what premium price does it get that Bitcoin at that time? That's an additional risk, just like in gold markets. I would hope to see, and I think if you look at the ETF filings we've seen so far, they're talking about 100% reserve and auditable reserve through provable holdings by publishing addresses that can be publicly audited. And I think that's a good idea.
Yeah, well, that remains to be seen. Keep your news feed going on. When is it? March? When?
March 11th.
March 11th. And what was your price prediction?
It just
1,200.
varies. It just really varies. But yeah, was it
1,200 something?
Well, it depends on what the price is on March 11th.
Yeah.
But like, yeah, the prediction is whatever the price is on March the 11th minus $900 times probably 3, but that's the probability of success. So.
All right.
Yeah, there
cool.
you go.
All right, man. I'm making a note here. We're gonna check you on that date. All right. Cool. Well, at this point, I'd like to open it up for questions. Does anybody in the room have a question for Andreas? And make sure you speak up so that he can hear you.
Hi, Andreas. I'm Jody. I live in London.
Hi, Jody.
I own a finance company in London. I got a business opportunity with Snapcard and MassPay in Los Angeles, Silicon Valley, for remittance. I've been having a lot of trouble getting accounts to cash out the wallet in London. I just wondered if you had any strategies on maybe circumnavigating the banks or Europe. But what I see is, why would banks give you an account to cash out of? Because they're losing control of the transfer of funds globally by doing crypto transfers. So just wondering if you had any ideas there.
Yeah, I would say possibly looking at opportunities with retail locations, or going completely peer-to-peer and using, human ATMs, as they're called, using people who deliver cash directly to the recipients of the remittances, or collect cash from the recipients of the remittances onto a mobile app, bypassing the banks entirely and working in cash only. You can also do that with retail operations, especially in areas where there are large numbers of immigrants in a neighborhood, and you can work with local grocery stores, the corner shop, basically. That's the model in London. I think we're going to see a lot more success with that model. Banks have no motivation to allow anyone to compete with them. And since they've already captured all of the regulators, they're not going to be forced to face any competition. So you basically bypass them. That's the beauty of decentralization.
Do you think there's a risk of getting done for money laundering when you open up an operation like that?
Yep.
Don't beat around the bush.
Yeah.
Stay in value.
Money laundering is only a crime if you don't have a banking license, and the crime consists primarily of daring to compete against the banks without a license. That's what money laundering is. So if you compete against the banks without a banking license, yes, you run the risk of being prosecuted for the crime of competing against banks without a license.
Are you aware of any jurisdictions that are kind of bucking the system in order to draw innovation? Is there a better place? I know you're on your world tour. What's the temperature in the different places around the world?
I think the truth is that the freest places in the world are the ones where the legal systems themselves are so disorganized that they can't keep up. Paralysis through disorganization is a fantastic form of freedom. The more organized and structured a society is, the less free it is. And if you've traveled to places like Southeast Asia, for example, and many places around the world, you find that societies that are disorganized and appear to an external observer to be chaotic are in fact extremely decentralized, extremely versatile, flexible, and free, very free places to live.
I have a question. I have friends who have invested in S-Coin. I don't know if you know of S-Coin, and they say S-Coin offers mining service, which my friends are making money on at the moment. But also they say that S-Coin is about to launch shortly on the European Stock Exchange, but that S-Coin also has already made agreements with some European bank to allow exchange of the cryptocurrency and converting it to cash. Are you aware of anything like that with that product?
S-Coin is the question.
Yeah, I haven't heard of that particular product. My experience so far is that well over 90% of the various coins that are being advertised out there are either scams, pyramid schemes, Ponzi schemes, hash cloud mining Ponzi schemes, or all of the above combined together. And so if it's very profitable in a way that seems very attractive, that's when you should be even more cautious. If you don't see losses accompanying great profits, you should be very cautious. If the volatility is only going in one direction, you should be very cautious. And if you can't run the software to evaluate the blockchain yourself, then it's almost certainly a scam. We've seen that with OneCoin, which is a notorious scam that's had a lot of traction. And the funny thing is these things are much better at marketing themselves than Bitcoin, because they can offer a promise. They can offer a promise of significant returns guaranteed. And that promise is a lie, but it is a very attractive lie. And get-rich-quick schemes are almost always a scam.
So when people are actually making money, and you know they're making money, then that means from the mining. Then how can you make money from the mining if it's a scam? Because I have friends who are actually making money. Like,
well, don't forget that Ponzi schemes pay out.
Oh, that's how Ponzi scheme works. So what you're doing is you're making money off what they call the greater fool. And as long as there is a supply of greater fools who are joining at the back end of this scheme who are not yet making money, they're funding the money that the people who are successful are. I'm not saying that's the case with this particular coin. I don't know. But if people are making money and they're making money without taking risks, they're making money without technical expertise, they're making money without knowledge, they're making money without doing something special, then really you should be asking, how come people can make money easily? And if you can make easy money without doing something special, why isn't everyone doing it? And when everyone does it, the Ponzi scheme collapses. So the fact that they're making money should worry you. If they're making money consistently, and in a very predictable manner without doing something productive for society, without taking any risk, without doing anything innovative, then that's not a sustainable model. If anyone can do it, and anyone does, it collapses.
There's a really easy way to do a check, and that's to type in the coin name, S-coin, scan into Google.
oh,
and
no, I've done a fair bit of research already on it. But if they're leasing mines and people are actually making money from the mining, then it's from the leasing, because people can either buy their own hardware and do mining, or they join up with larger organizations who've got masses of machines in warehouses processing and take a share in a mine. And
yeah, 95% of cloud mining schemes are scams. They are straight up Ponzi schemes. And the reason is there is no effective way to prove whether the money you're making comes from the mining share that you've invested in, or simply from the money that the people after you are investing into the same scheme, which is what a Ponzi is. Cloud mining in itself is almost always a Ponzi. I have not seen a single one that I would trust yet, and I've seen hundreds of examples of them collapse. So if they're making money from mining, but they're not actually running any hardware, they just put some money in and money keeps pouring out every month, I would take a 95 to 5% bet on that myself, that it's a Ponzi scheme.
Yeah,
because they just keep on selling mines off the good. If your mining is saying you're making money, you're putting out the good word that you're making money, and it's probably got a value of 2 mines to 1. So every 2 people that buy a new mine, they can pay out. It's like a pyramid.
Right. It's the greater fool. It's the basis of all Ponzi schemes. As long as you can find greater fools to join on the back end who will promise the same returns that the previous people made. So yeah, if it was very easy to do this and you put money in and risk-free, you're making money every month, that should raise a gigantic red flag in your mind.
I mean, a word to the wise might be, not get out right now, quit out, get out. But like, be aware of what's likely down the road. Make money.
They run out of greater fools.
So what? Make money while you can.
Well, but you're making money at the expense of a greater fool.
Yes,
I wouldn't
are.
engage in that at all.
Yeah, it depends on your.
It doesn't matter that you're
People
making
make
money. You're
money
making
out of
money
that
at the
Ponzi
expense
scheme.
of.
Yeah.
Yeah.
But
yes.
All right, good question, and I think that applies to
Yeah. And that's one of my one of the things that I've realized through my visits here in Southeast Asia has been that Ponzi schemes, pyramid schemes, multi-level marketing schemes are much more prevalent here than there are in the West. And part of the reason for that is because investors with experience of sniffing those things out in the West have 50 years of experience. In the East, investment by the middle class and consumers is relatively new. And so that experience doesn't exist. Unfortunately, the only way to learn that lesson is by being burned yourself through investing in one of these schemes. And people are gradually learning that. That makes them very profitable, these scams.
Yeah, I can back up anecdotally. We have our Bitcoin 101 class in English, and then we also have it in Indonesian. And when we have the class in Indonesian, lots and lots of people show up with these questions about this mining pool or this coin or this, we had that MMM thing going on for a while, and now OneCoin, and it seems to be much more per capita prevalent in the Indonesian-speaking population. So it's a sad thing because I think Bitcoin could really help the third world. The proverbial unbanked. It could be a great thing for them, and some people are showing up and taking advantage.
I've got a question.
Yeah.
Andreas, I'd like to hear your thoughts on, let's just background it. Like, probably a lot of people who've been in Bitcoin a while now have seen some decent gains off Bitcoin. I probably got a not so significant amount of money sitting in Bitcoin, and probably the elephant in the room is, what if it all disappears if Bitcoin fails? And I thought I'd like to get your ideas on or thoughts on a Bitcoin failure, chances of it over the next 10 years, ways that it could fail. Yeah.
And what's the hedge?
Yeah. And protecting against it,
yeah.
Yes.
Bitcoin is a highly experimental, disruptive, and new technology, which will face enormous opposition from established interests. And if you're using Bitcoin as your primary investment without diversification, you are an idiot who will lose money. That is guaranteed. You will lose money because volatility may cause you to lose money, because you will react to the market fluctuations and buy high, sell low, as most investors do in a panic. And I would suggest that Bitcoin is a technology. Learning about the technology, gaining skills in the technology, is something that has value in the long term, far in excess of the value of the currency itself. And skills can never go to zero. What you learn cannot be taken away from you or lost. As an investment itself, Bitcoin should be part of a broadly diversified portfolio that's diversified in terms of volatility, in terms of geography, in terms of risk exposure. It makes for a good diversification strategy because it's counter-correlated to a lot of the traditional assets. And one of the problems that investors face nowadays is that they can't find anything counter-correlated, because all investments right now are not doing price discovery on the market of productive goods and services. They're doing price discovery on the mood of Janet Yellen and Mario Draghi. And as long as the price discovery is how much quantitative easing are central banks going to do, all of these things move in complete synchrony. And what you're investing in is quite dangerous. So Bitcoin does offer diversification from that risk, but you don't use a hedging instrument as your primary savings vehicle. So I would say invest in Bitcoin in moderation, in amounts that you can afford to lose as part of a well-diversified portfolio, and understanding fully the risks and volatility involved in any of these things, and keep properly diversified. A diversified portfolio can't be all in Bitcoin. It has to include other things. Physical ownership of precious metals is always a good hedge, especially at times of uncertainty. A combination of equities, bonds, real estate, skills, education, cryptocurrencies, precious metals, and then figure out what ratio is good for you. And yes, Bitcoin can fail. It can fail for a variety of reasons. It can fail for technical reasons. It can fail because of fragmentation of the community and skill base within Bitcoin. It can fail because of politics. It can fail because of technical attacks. It can fail in a number of ways. And failure doesn't mean necessarily it goes to zero or never comes back. But if your Bitcoin investments decline by a significant percentage and they stay stuck there for 5 years, are you still comfortable holding that? Maybe that's what happens. Maybe it comes back, but you don't have enough time to wait for it to come back. So it also depends where you are in terms of your life, you know, in terms of your appetite for risk. People who are just about to retire obviously have a lot less appetite for risk than a 20-year-old who has spare cash that they would have, you know, smoked in cigarettes and drank as coffee otherwise. For them, maybe this is a good saving strategy. So what if they lose it?
Excellent. Well, you know, we've been talking about hedging Bitcoin with altcoins and asking the question, should you hedge with altcoins or hedge with fiat currency? And we've looked at some of the altcoins, and you know, the criteria becomes like, what are the potential problems with Bitcoin, and do you invest a little bit in like a privacy coin, fungibility coin? Do you invest a little bit in one that has better governance? Do you invest in one that has a different code base than Bitcoin? Any thoughts there?
Yeah, and I do. And I do in proportion to the robustness and security of the Bitcoin system. So the vast majority of my cryptocurrency investments are in Bitcoin. It represents more than 85% of the market at the moment. It has the longest history, the most robust security, the absolutely greatest dream team development team of any system out there, the most scientists, researchers, and developers, and geniuses working to make it better. So in that proportion. But yes, I have holdings and I am interested in other currencies. But again, I don't treat these purely as investments. I acquire various cryptocurrencies in order to study them, because to study a cryptocurrency, you have to download and install the software, run it for yourself, create addresses, make a conversion, do a transaction, see how the code base works, how long it takes to run the blockchain, download things, mine perhaps. I've done all of those things in a number of cryptocurrencies, and to me, this is a learning tool primarily. It also gives me a bit of diversification for my Bitcoin, but that's not really the primary thing. Almost all of my investment is in skills and my reputation, more so than any currency.
I have another question.
Yeah, okay.
It seems like everyone's talking about just buying coins. My first time here. What about capitalizing on businesses around the cryptocurrency? Can you see any, apart from just investing and buying coins, right? Is there businesses that you can see? Obviously, I've mentioned remittance, but is there any other businesses that are on the ground that you can see coming forward?
Yeah, I mean, if this thing plays out as I expect it to play out, there will be many very interesting industries that will emerge out of cryptocurrencies. So the question is, are you an entrepreneur? If you're an entrepreneur rather than an investor, then you should be building companies. However, it's very tricky to do that. The chances of you succeeding in a startup are far less than the chances of you getting a return simply by buying the currency. That's been the biggest conundrum for investors in this space, is that so far the best return possible has been to simply buy the currency and hold it, and then gain from the entire industry's success or failure and be exposed to that, rather than more narrowly investing in a specific company in the space. That's always been a challenge in cryptocurrencies. But if you're an entrepreneur, the value you get out of starting a business is far more than simply the investment of your capital. You get the learning experience, you get to build something, you get the satisfaction of participating in something productive and innovative for humanity. And that is why entrepreneurs start businesses. They don't start businesses because they think, oh, the return on investment I can make from a startup is greater than if I put it in bonds. No, they would die of boredom if they invested in bonds. They do startups because they can't not do startups. That's the essence of an entrepreneur, is you have to do that to the point where other people think you are crazy. If other people don't think you are crazy, you're not doing the entrepreneur thing correctly. When people around you are telling you you're crazy, that probably means that you're doing something outside the box enough that it has a small chance of changing humanity. And that's what entrepreneurs live for. So yes, there's lots of opportunities for that. But again, that's not an investment strategy. It's a lifestyle choice.
What are those businesses? Can you go a bit more into detail about who's doing what? Like from first mover advantage kind of position, that's what I'm looking at. Like,
yeah, I think it's really tricky at the moment, especially with regards to timing. Even remittances has proven very difficult. It seems like the most effective businesses right now are the ones that support the primary function of Bitcoin, which is wealth protection, currency speculation, cross-border transactions, capital flights, protection from inflation, and hedging as a safe haven. And those businesses primarily are exchanges, wallets, money transmission or transfer systems. But again, if you just reinvent what already exists in the banking system, you're not doing very well. And the regulatory risk is very high. I think it's still too early to see which businesses are going to be successful. But there's a lot of work to be done in infrastructure. And one of the interesting things that we're seeing is that the business of infrastructure is hyper-local. You can't easily take an exchange in country A and replicate that model in country B, because 90% of the business of running an exchange is kissing the asses of politicians and regulators, dealing with cantankerous bankers who are trying to shut you down, and greasing palms. It has nothing to do with technology. So there's a whole new set of politicians whose ass you need to kiss in country B, and your model doesn't really transfer. So and that can be a good thing. That means that we're going to need 600 to 700 exchanges worldwide, and we currently have about 200 to 300. So there's room for growth in that industry too.
I just want to, does that answer your question?
Yeah, I'm curious about how you turn the coin into cash on the ground in the country that you're in. So I got a wallet and I need to turn it into cash on the ground in the country that I'm in, and where you see that kind of industry moving.
Ultimately, that's not an industry. Ultimately, I think the most effective way of converting it into cash on the ground is peer-to-peer and decentralized, and that's why we're seeing the business model of things like local Bitcoins be far more successful than many of the country exchanges, because that model is transferable. Cash transactions in person seems to be the predominant model, and that is of limited volume right now, but it is absolutely anti-fragile, resilient, survivable, and can operate even under countries with extreme political situations. When all else fails in places like Venezuela, you have local Bitcoins, you have person-to-person transfers with cash. Even when cash is banned, you can do cash, as we've seen in some countries. So that model is how you convert. But the more important model is, over time, you don't convert.
That works on small amounts. When you're talking of tens of millions for companies moving money around the world, you can't do peer-to-peer anymore.
No, you should use Swift.
Yeah. Yeah.
Yeah, the spreads are too high.
Because the bottom line is Bitcoin is not the currency of companies. it is not the currency of corporations. It is the currency of the people, and people don't have $10 million to move around and don't care about that. And Bitcoin doesn't seem to be really geared towards solving those problems yet. In my mind, it's not suitable for solving the needs of multinational corporations trying to move money across borders, because those needs are pretty well served already. They have the ability to do these things. It's people who don't.
But they don't, though. Transferring money from London to Australia takes 3 days, costs a lot. You don't get the best exchange rate. I mean, if you capitalize on that market, there's huge gains to be made. I mean, the profits could be massive.
I think that's called a credit default swap.
Yeah. Well, maybe that's the market you should be focused on. The problem is that is not a matter of technology. It is 100% a matter of politics, and you will soon discover what happens when you try to compete with those players.
All right, we have a question.
Well, I thought I'd like to share with you one business model.
Speak up.
A business model that's emerged in South Africa. A friend of mine who started the Sun Exchange, which is a bank of solar energy at a school, and it supplies the school's energy needs, and people can invest with fiat or with Bitcoin, and the excess energy generated by the solar system, it becomes their interest, becomes their payout, and they can be paid out in Bitcoin or in fiat. And at this stage, it's the first model of its kind, and they're developing it in other places, but that's one way that it's been used, actually being put into motion, not just as an investment strategy.
That's a great point. I think one of the things that people don't realize is that Bitcoin is an energy coin. Its dependence on proof of work has already shown that it becomes a very interesting way to deal with excess capacity of energy produced by certain forms of energy that can't be turned off, wind and solar, for example, and where there's a mismatch between supply and demand. So we're already seeing energy companies move into Bitcoin mining and using Bitcoin as a battery. There are some examples of solar energy companies using Bitcoin mining as a way to capitalize on excess production. And the decentralized nature of alternative energy like solar and wind matches very nicely with the decentralized nature of Bitcoin. So if you think of Bitcoin as an energy coin, I think there's a very good overlap in those areas.
And that's in South Africa that's happening? Whereabouts in South Africa?
Cape Town.
In Cape Town. You're
Fantastic.
headed sometime soon, yeah?
Yeah, I'm going to be in Cape Town on March 5th. And I've got 2 events organized there. I'm going to be speaking at the Cape Town Bitcoin meetup on March 6th. And at the Cape Town Ethereum meetup on March 15th. So I'm looking forward to learning more about the activities in South Africa. I don't really have anything to add to this conversation until I've been there and seen it with my own eyes.
Yeah. Cool, very cool.
I'm sure that you will meet Abe Cambridge there. He is the developer of the Sun Exchange.
The Sun Exchange. Oh, cool.
I look forward to that.
All right, we've got a question from the Telegram group. Andreas asks, you said in the past that internet scaling was a hot issue in the early days and that the internet kept failing to scale, quote, failing to scale, until it did. And Bitcoin will probably do the same. What do you think the Bitcoin failing to scale roadmap will look like? Do you think we already have all the tools we need to scale to Visa level amounts of transactions?
Yeah, this is really interesting because a lot of the conversation revolves around Visa level amounts of transactions. And one of the big mistakes that those observing it from the outside, organizations like Visa, for example, is that they look at their own progression over decades and they take that and they extrapolate it out and say, okay, well, we could do 100,000 transactions per second or 10,000 transactions per second this year. 10 years ago, we could do half of that or a third of that. And 20 years before that, we could do 1/20th of that. So they extrapolate out and they look at Bitcoin and say, okay, you can do 7 transactions per second. So you'll catch up with Visa in the year 2255 or something like that. The problem with that model is that they're expecting linear growth, and Bitcoin doesn't do linear growth. Bitcoin does exponential growth. And so what happens is that Bitcoin will remain below Visa transaction levels for a very long time as it builds basic infrastructure. And then at some point, it's going to leapfrog. It's going to achieve Visa level transactions, and 1 month later, it's going to achieve 10 times Visa level transactions. And 3 months after that, it's going to achieve 100 times Visa level transactions and keep growing at that rate. Interesting things that happens is an exponential curve and a linear curve. The exponential curve can remain below the linear curve and seem to not be moving at all for a very long time. And then it turns vertical. And when it crosses the linear curve, it's already vertical, and it soon surpasses it by orders of magnitude. Bitcoin will do Visa level transactions, but that's irrelevant because soon thereafter it's going to do 100x Visa level transactions and then 10,000x Visa level transactions. And the really interesting thing that you can think about is what happens when you can so far exceed what is possible with a centralized system like Visa that it no longer makes any sense to use that as a metric. So at some point, we're going to be talking about whether Visa can reestablish parity with Bitcoin level transactions. And the answer will be very clear, no. If you look at what's happening with the Lightning Network and layer 2 technologies like Tumblebit, it's clear that with just a few more years development, Bitcoin can not only approach Visa level transactions, but far, far exceed them in a way that still maintains the decentralized level of trust and censorship resistance and anonymity and privacy features that Visa can never do. And at that point, there really is no comparison anymore. This is a bit like asking in 1994, how many faxes can you do over the internet? And for a very long time, that question actually troubled people. How many phone calls can you do over the internet? And the moment you can answer that question, it no longer becomes relevant. At some point, yes, we could do all of the faxes and phone calls over the internet. And then we stopped doing faxes and phone calls because we were no longer playing the same game.
As a follow-up to that, we're trying to build a Bitcoin economy here in Bali, and there's a question of how do we get from here to this world that you're describing when we're starting to see very expensive transaction fees. Sometimes people don't attach the right transaction fee, and it takes a long time for merchants to receive their spendable Bitcoin. Some transactions fall out of the mempool before they get approved, and we've had a very smooth trajectory until this last little bit of time where we're starting to see retail level Bitcoin like kind of not working, or at least hitting a few bumps.
Yeah, and quite honestly, I don't think retail level Bitcoin can work on the main chain. I think that's not going to be possible. We're certainly not going to reach global proportions by operating on the main chain. We're going to need to think about second layer solutions for that.
But we know we have SegWit, right? And SegWit's like in question.
Yes, it is, and we'll see how that plays out. There are other ways to implement second layer solutions without SegWit if we have to. I will remain the last optimist. I think SegWit will activate within the 1 year time period, I think sooner than people expect. And I think we're going to reach a tipping point, and then it's very quickly going to roll into activation. Once it starts moving forward again and you see more miners adopting it, and I think a lot of them are still working on integration and interoperability, once it gets a bit of momentum, it's going to create a tipping point. There's at that point, I don't think it can be stopped. So we'll see. Maybe it will. Maybe we'll change plans. Maybe the core developers are going to issue a different approach. we'll just have to wait and see. In the meantime, I think it's funny, when you say Bitcoin transactions are too expensive, the problem is, again, we're thinking about a wrong model as to how this will work. I remember the first video conference I did. The first video conference I did on the internet was in 1992 at the University of London. We did a video conference with a system in Australia. That video conference had cost in excess of £500,000 to set up. It required a direct transatlantic connection to the University of London on the internet at the time, which was a very expensive proposition. A room-level video conferencing setup with cameras, some very, very expensive routers. And guess what? We're doing the same thing now. So you could say, well, the video call was very expensive at the time. And clearly at that price, nobody was going to be doing video conferences. But with technologies that operate on an exponential level, I don't expect fees will continue to be expensive. I think what we're going to see is we're going to move to second layer solutions, and then the price is going to drop precipitously. But in the meantime, yes, it's going to cost 50 cents or $1. That's how much you have to pay to do an uncensorable, decentralized, tamper-proof global transaction in a currency that no government controls. $1, a whole dollar. If that's too expensive for you, go back to Visa. You're missing the point of what Bitcoin is.
Well, we've been at it for about 3 years now, and we have a lot of merchants that are really on board with Bitcoin. Not only do they like it, their staff likes it, but they've seen the store of value aspect of it to the point where they're willing to offer it at a discount. But we're at this inflection point right now where, we got to get to these second layer solutions, and we're kind of white knuckling it right now. But I think ultimately we'll get there. But it's a bit of a crazy time.
We absolutely will, one way or another. And if it's not through the current iteration of Bitcoin, it's going to be through something else. I think we will. In fact, I'm certain of it, because the technology that has been developed over the last 2 years to allow some absolutely astonishing things. If you've watched a Lightning Network demo, for example, or a Tumblebit demo, it's really mind-blowing what you can do. We're talking about hundreds of thousands of transactions per second to a granularity of sub-Satoshi and sub-millisecond granularity for transactions. And that changes the game completely. We'll see what happens, but if something like that is possible, I don't think it's going to be stopped because somebody said something to somebody else and hurt their feelings, and now they're blocking it. I mean, that's just ridiculous. I think we're going to overcome a lot of these political issues and move forward.
What percentage of merchants here are receiving payment for Bitcoin for their product?
You mean out of all the merchants?
Well, it sounds like you've got a bit of a local knowledge here but so you're obviously setting up merchants, or you know about merchants that are setting up to be paid with Bitcoin.
That's right.
How many transactions do you see here per month? Or maybe the better question is, what percentage of their transactions are being paid via Bitcoin over cash or Visa?
It's very small.
Yeah.
It's less than 1% of their total transactions, and we only see about 10 to 15 transactions per day, which I think is quite good, but it's minuscule in the grand scheme of things.
And is that
10 to 15 transactions is pretty amazing.
Yeah, we've got, you can rent a scooter, you can have lunch, you can stay in a hotel, rent a few villas.
So
it's we're getting there.
So where's the benefit for the retailer? Just for if it's only 1%, what's the point of having the infrastructure there in their store just because they like the idea? Or
well,
how do they monetize? How are they turning that into being everyone's motivated by money? Right? So,
well, no, that's actually not true.
I mean, retailer usually.
Well, probably most of them are. That's probably why most of them aren't accepting Bitcoin yet. There's a small contingent that are philosophically on board, and you've got a bunch of users that are also philosophically on board that patronize those businesses. So we're playing both ends of the scale. Like we'll have Bitcoin 101 this Saturday. We'll probably create about 20 new Bitcoin consumers, and then we'll go to one of the merchants that actually accepts Bitcoin. And there's we're trying to create an economic loop, right? We're to the point where some of these merchants are going to begin paying their staff in Bitcoin, and their staff can buy their electricity and Tulsa in Bitcoin thanks to the local exchange and their relationships with the power company. So little by little, we're getting there. But it's not. It's more of a philosophical choice than a business choice at the moment.
Okay.
Yeah. But
one of the things that's curious is in Australia, in Launceston, city in Tasmania, they actually have an ATM. So if you've got Bitcoin, you can go there and cash out in Australian currency from the ATM. I don't know how they do it. I've not done it. But
Do you know how they do it? Do you know what the system is with the ATM? There's a few
Yeah,
around the world now. So
yeah, I've used a two-way ATM. We've got a one-way ATM right here at Ubud. You can buy Bitcoin right here in the lobby, but it's more of a Bitcoin vending machine than an ATM.
What's the business model from the owner of the ATM? What are they getting out of it, and how does it work?
They're making like between 1% and 3% per transaction.
Right.
Yeah. We've also got a Bitcoin storefront over on Jalan Sukma, where you can go the other direction. So we've got a Bitcoin storefront where you can sell your Bitcoins for cash, and we've got an ATM that'll take you the other direction.
And you're not worried about the money laundering side of that? Because I was thinking in London, that would be like a Western Union. You know, Western Union, you have that.
Yeah.
Western Union.
Yes.
Exactly the same thing here, Australia, Asia, America, maybe a few capital cities. You'd be able to move funds around the world much faster, much better than Western Union is. But it's just having an actual shop front. It's risky of like feds coming in one day going, right, we're locking you up for money laundering, right?
And they're going to do that. I think it's important to realize that what you're going to see is a lot more opposition to these models of working outside of the system. And there's two things that really work in this particular dynamic that are interesting. One is that if you shut down part of the flow, if you build a wall, it not only stops the transactions going out, it also stops them from going in. So for example, many people will buy Bitcoin and casually exchange it into fiat because it's easy to buy Bitcoin again or exchange it back. You cut off that avenue, a lot of people are not going to buy Bitcoin, sure. But a lot of people who have Bitcoin are going to decide, you know what? I don't want to exchange anymore because it's hard to get back in and I'm already in. And I have an investment that I want to preserve. And I really believe in this. So from now on, I'm only going to take Bitcoin. I'm only going to pay with Bitcoin. So they stay inside. And that's a perverse kind of unexpected consequence of this. It kind of reminds me, and I'll use another analogy, which is in the 80s, Reagan changed the immigration status in the US and really upped the barriers for immigration to Mexico. One of the interesting things that happened, the unintended consequence, was that for decades before that, Mexican migrants would go to the US seasonally to do fruit picking and agricultural work for a season and then return to Mexico until Reagan made it very difficult for them to get in. And what happened that was interesting is a lot of them decided not to get out. So the number of Mexicans who stayed in the US increased dramatically. So that was the unintended consequence, was that by making it harder to get in, a lot of people who were already in or who managed to get in decided they're not going out again. So what went from a seasonal thing to a permanent migration. Right now, a lot of people move in and out of Bitcoin casually. If you shut down that avenue, a lot of people are not going to get in, but a lot of people are going to be staying. And those people are going to be loyal customers of Bitcoin because perhaps the political situation in their country, Venezuela, for example, makes it impossible for them to live on the other side of that wall. And they're just going to set up tent and say, fine, I'll just stick to Bitcoin. That's the unintended consequence. The other unintended consequence is that if you shut down the the storefront turns into a teenager on a scooter with a backpack full of cash going village to village doing the remittance last mile in cash. In some places, it's going to be two teenagers, one with a backpack of cash and one with a shotgun just for security. But basically, that means that for the investment of a scooter and a shotgun, you can start an international remittance company. and people are going to do that. Imagine the business model where you make it impossible to use the legal avenues. In places like Lagos, Nigeria, or Mexico City, or Manila in the Philippines. Well, the storefront Western Union is going to be replaced by a much less expensive kid on a scooter. And what exactly are you going to do for that? How do you stop that? Good luck.
Well said, well said. Well, we've just got a little bit of time left, and I wanted to take advantage of your specialized knowledge and connection to Greece. Greece is, has a moment-by-moment problem going on, and I think it has a relationship to the macroeconomic landscape. What's your take on what's going on in Greece, this latest round of turmoil there?
Well, Greece is a proverbial canary in the coal mine. What it's doing is it's giving you early warning on what happens when the interests of central banking and bank liquidity conflict with the sovereignty and well-being of a nation that's too small to defend itself. And what happens is this kind of predatory takeover. Sovereignty of the Greek state has been eliminated, where Greece is now in a recession that is worse than the American Depression of the 1920s, and which has driven almost 60 to 75% of people under 25 into unemployment, permanent unemployment, and destroyed their prospects, where the Greek economy cannot recover, where the Greek debt will not and cannot be paid back. The circumstances that they're requesting are pretty ridiculous. If you looked at that from the perspective of debt, with a debt to GDP ratio exceeding 200% within the next decade, they expect Greece to maintain 3.5% primary surplus for the next 20 years to pay back its debt. Now, no country in history has ever done that. And they want Greece to do that, even though it's destroyed economically. And that is the basis on which the loans get repaid. So right now, there's this shell game where Germany gives money to Greece. 99% of that money goes straight back into the coffers of Deutsche Bank to pay back loans, or Paribas to hold up the French and German banks. Greece is not being bailed out. The French and German banks are being bailed out through Greece, because if Greece says we are insolvent, the problem is that the French and German banks are insolvent. The problem is that Europe is insolvent. The euro is insolvent. Of course, the reality is that Greece, the euro, the French and German banks are all insolvent. They're just playing musical chairs, and Greece is getting trampled in the process. So this is the canary in the coal mine. This tells you what happens to a weak country when international creditors decide to asset strip it in order to protect investors. And this model is getting repeated again and again around the world. And it is a form of economic warfare. And the victims of this economic warfare are an entire generation of young people who have zero prospects. So it should be horrifying to everyone. But for the most part, people make excuses and rationalizations. Can't happen here. It's their own fault. They didn't pay taxes. You know, they're lazy, et cetera, et cetera. Of course, the problem is if you look at the numbers, the same thing applies to Italy, Spain, Portugal, Ireland, and half the periphery of Europe. So if they're all lazy and not paying taxes, something's wrong here, and that is the truth. We'll see. I think we will see crisis after crisis after crisis in Greece, and the only thing they could do is keep kicking the can and playing musical chairs, because the very simple fact of the matter is this: Greece is insolvent. Greece has been insolvent since 2008, and so is Europe. They just can't admit it.
So is this where we're going to see the first kids on scooters with backpacks full of cash and maybe a shotgun?
I mean, yeah, you might see that. You might see those kinds of solutions. They will emerge as necessary. It's amazing how creative people get. Necessity is the mother of invention. Necessity is the mother of innovation. And necessity is also the mother of Bitcoin adoption. So necessity has many children.
In Greece, there's talk of them going back to the drachma. How realistic is that?
I mean, the only difference, so the problem with going back to the drachma is that then you have to mark to market. And the only reason the euro is solvent is because it's marked to fiction right now. If you mark to market, Greece will have to take a 20 to 30% haircut. Probably should have done that in 2009. It's going to be a lot more painful now on top of the 20% depression they've already had. But at some point, it's going to happen. And it's either going to happen because Greece reverts to the drachma or because the euro reaches parity with the drachma and the whole of Europe takes a 20% haircut. Reality will catch up.
All right, I think we've got time for one more question, one final question for our man, Andreas. Edmund, do you have a question?
Oh, no, well, the only question was, you sort of covered it with the block size debate, and I think it was Andreas that talked about compromise being around the corner. I just noticed looking at the voting record of the miners, they all seem to be voting for only one solution. There doesn't seem, now I'm wondering if that's possible. Is that because they can't vote for more than one solution, or just because they're stubbornly all wanting to vote for one solution? And if it's the latter, then how confident is Andreas that compromise is still around the corner?
Well, you know, in some respects, segregated witness is the compromise option. It has been the compromise option because it does represent an almost 2 megabyte increase in size, and as well as a few other things in scaling. And so by rejecting that, miners are vetoing further progress on the scaling solution. If we can't get the very well-tested solution of SegWit approved, at the moment there are no other solutions that are well-tested or well-performing or on the horizon even for adoption. So by blocking SegWit, they're not getting the alternative because there is no viable alternative. And that's why you see this stalemate where we're not getting SegWit, but we're not getting anything else because there is nothing else. You know, I think at some point, perhaps the pressure on the network gets to a point where miners or developers decide that something needs to change and they change something. But right now, quite honestly, even though you get these delays in the mempool, by the way, I've never had a problem having a transaction confirm in anything but the next block. I just pay the fee. And the fee has been going up, but the fee is not a concern for me. It makes the use of micropayments and small payments impossible at the moment. And it's pushing network to be a larger value transfer network, at least temporarily, until we have something else. That's not a failure. The reason you're not seeing progress is simply because the status quo is still working. Bitcoin still works for more than 1 million people and processing millions of transactions with fees going up. And so the status quo will persist until people feel the need to change it. Compromise, it may happen, but there has to be necessity driving it. And right now, there's no necessity to change anything. The miners are making more money from fees. They don't feel that this is damaging Bitcoin in the long term. The developers are continuing to develop a variety of different things. And, you know, just pay the fee and your transaction works fine.
Thank you.
Great, great. Well, with that, Andreas, I want to say on behalf of everyone here in Bali, thank you very much for making some time to be with us. We'd love to host you here in person someday. We'll roll out the red carpet for you.
I would love to visit Bali. I mean, it's been something I've been wanting to do for a while. Unfortunately, it didn't work out this time, but I am definitely going to take advantage of that invitation for sure.
Well, when you come, we'll roll out the red carpet for you and show you the amazing thing we've got going on here with our local Bitcoin economy. And yeah, it'll be a really fun visit. So consider it an open invitation. I'll keep bothering you about it. Don't worry about that.
Yeah, thank you.
And thank you very much for just making this time for us. It's been, I think it's been great, right? Thank you. Thank you very, very much.
You are a remarkable communicator. Amazing communicator.
Oh, yes, yes, indeed.
Yeah, thank you so much. I'm really glad the bandwidth worked out.
Yeah, it's great.
We've been quite lucky with that. Again, thank you so much for hosting me. Keep up the good work building community there in Bali, and I hope to see you all soon.
Great, great. Thank you. All right, guys. Well, that's all the time we've got for tonight. Don't forget, we've got Bitcoin 101 this Saturday at 10 a.m. You can go to bitcoinsinbali/Bitcoin101 to register. And we're going to continue this conversation over at Kismet. We're going to turn our Bitcoin into polenta lasagna and spicy margaritas. So hopefully you'll join us there. And of course, next week, same time, same channel, right here at 5 p.m. local time in Bali. We'll see you there. Thanks, guys.
Well hosted, Gary. Thank you.
Thank you.
Yeah.
That was really good.